Welcome back to Playing with House Money. If you would like to receive free stock from Webull, click the Webull link, which will take you to Webull's website, and once you open a brokerage account, Webull will give you free stock. Push the subscribe button so you do not miss out on our next video. Velocity banking, or infinite banking as it is called by some, is one of the current hot personal finance topics on YouTube. There are many videos circulating on social media platforms promoting velocity banking as some type of new, innovative tool that can significantly reduce the number of mortgage payments and total interest a borrower pays when velocity banking is compared to a traditional 30-year fixed mortgage. Velocity banking sounds amazing as described in many of these online videos. It almost sounds like a new wonder drug or silver bullet for mortgage payments. As you can imagine, videos about velocity banking have received a high number of views. What borrower with a 30-year fixed mortgage wouldn't be interested in an idea or tool that can save tens of thousands or even hundreds of thousands of dollars? This is what some creators are claiming velocity banking can do. There is only one problem: it isn't true at all. Anyone who understands basic finance knows that the only way to reduce the number of payments and save a lot of interest you would pay to your lender is to pay more than your monthly payment by making a huge lump sum payment or several small payments. There is no silver bullet or magic drug that will reduce your mortgage payments or reduce your total interest paid during the life of the mortgage by a significant amount other than paying more than your monthly payment. As the old adage goes, if it is too good to be true, it probably isn't true. What is velocity banking? Drumroll. Wait for it. Velocity banking is simply using a home equity line of credit, HELOC, rather than a typical 30-year fixed-rate mortgage. Let me repeat it one more time. Velocity banking is just using a HELOC rather than a 30-year fixed mortgage. You are probably wondering how a HELOC can significantly reduce the number of payments and interest compared to a 30-year fixed mortgage. In one video, a creator stated that banks do not tell consumers about the option of taking out a HELOC to buy real property and prefer to promote 30-year fixed mortgages because banks and lenders make more money from mortgages. The creator failed to mention that no bank will offer anyone buying a property a HELOC against the property they plan to purchase. HELOCs are only available to access the equity in property that you already own. There is absolutely no way anyone can obtain a HELOC on real property they do not own. The main reason promoters of velocity banking cite as a preference for a HELOC over a 30-year fixed mortgage is the ability to quickly access the equity at any time during the drawdown period, especially in an emergency. When a lump sum payment is made on a 30-year fixed mortgage, there is no way to quickly access the equity created by making the huge payment. Applying for a HELOC to access your equity can take about 30 to 120 days or even longer to complete depending on the lender. An alternative access to a quick source of funds in an emergency might be credit cards or title loans in lieu of a HELOC. To reiterate, there is nothing special about a HELOC that makes it advantageous over a 30-year fixed mortgage other than access to equity during the drawdown period. A $50,000 payment to a 30-year fixed mortgage or a HELOC has the same effect, assuming the interest rate for both are similar. The principal will decrease by $50,000. If you would like to receive free stock from Webull, click the Webull link, which will take you to Webull's website, and once you open a brokerage account, Webull will give you free stock. Push the subscribe button so you do not miss out on our next video.